everyone. Grab a seat and let's have a friendly chat about what's buzzing in the real estate world. I'm going to try and break down the current market and share some insights in a way that feels like we're just catching up, having a cup of coffee. If it's your first time tuning in, my name is Grzenia. I'm a local realtor here in Phoenix. And if you have any real estate needs, give me a call. So here's the lowdown. So as we're moving towards the end of the year, it's clear that real estate is going through a transformation and the market is shifting. Sellers have had a huge upper hand in most areas, but that's been changing. Supply is rising at its fastest rate since last year, while demand is slowly losing steam. And as a result, we are leaning towards a buyer's market every day. And what's behind this shift? Obviously, high interest rates.
They charge a high interest rate, never miss one payment.
Recently, they've hit their highest level in 2 decades, and this is definitely taking a toll on demand. So with demand fading, homes are hanging on the market a little longer. Average days on market has gone up, and this has led to an increase in active listings. So in a nutshell, we are seeing less action in the market, which means fewer sales. And when I checked today, we have just over 6,000 pending transactions. That means homes under contract. The latest data from the Cromford report gives us the inside scoop. Listings under contract are down 8.6% this month, and closed sales have dropped 11% compared to last month. It's very clear that the seller's market's taking a hit, largely due to the rates. Sellers may not feel as confident as they did a few months back, and buyers, especially buyers that are relying on financing, are feeling the pinch when it comes to their monthly payments. It's a challenge that's affecting all sectors of the housing industry. So if you are a seller in this ever-changing market, here's some things you should definitely keep in mind. Price your home based on where the market is heading in a couple of months, not just recent sales. Also, make sure to take a look at active listings because that is your current competition. Be ready to offer seller concessions like helping a buyer buy down their current rate. Last month, 45% of transactions had some type of seller concession, and we're likely to see that number rise. New home builders have been offering incentives to buyers, and they've been having a lot of success with this. Make sure to get your home show ready. In a competitive market with plenty of choices, homes in great shape tend to sell faster and at higher prices. And avoid falling for offers from investors looking to buy below market value. When the market is shifting away from sellers, some sellers fall for the sure thing, right? And that sure thing is offered by investors. But keep in mind that investors always pay between 20 and 30% below market value. They're in it to make a profit. So if you're trying to get market value, you've got to stay on the market and price your home competitively. So those are some tips for the sellers. If you're a buyer, here's what you need to know. Right now, this time of year is usually the best time to buy. You have fewer competitors, fewer buyers in the market, and you have a wide range of homes to choose from. You've probably heard this term, date the rate, marry the house. The interest rate is the key factor right now. So make sure to negotiate with the seller to help you buy down that rate, and then think about refinancing down the road in a year or two when rates improve. The spring buying season falls between March and June every year. So buying when everyone else is buying might not be the best option. If you can make a move now, you definitely want to seize the opportunity. So let's look ahead. You might be curious about the real estate market and what it's going to look like in 2024. But the truth is, predicting beyond a month or two is nearly impossible. And whatever the experts say, it's still just a prediction, a hypothetical based on the data and where we think the market may be heading. But there's never any guarantee. You know, a lot of people say markets are always good in an election year, but there really is no concrete evidence to support that theory. So as the Cromford report suggests, all we can do is focus on interpreting trends over the next 6 to 8 weeks. And right now, it's looking a little wonky. But just remember, we felt the same way back in November of 2022. So depending on what market you're in, you may say, Paul, well, things are way worse than you're talking about, or I don't know what you're talking about. Things are great in my market. You have to remember different price points in different geographic areas can create micro markets within the broader market. And that will definitely have an effect on supply and demand. So if you're thinking about buying or selling, or maybe relocating, or you just have questions about the market, please don't hesitate to reach out. Call, text, email anytime. Thanks for checking out this video, and I'll see you all in the next episode.